I don't think lithium stocks are undervalued at all. In my mind, they're actually slightly expensive. Now,
what about pure organic volume growth?
I want to look on NAV.
see, NAV's a bull valuation basis because it depends on what copper price you put in. You're using a DCF for mining stocks?
I disagree. I've always used a DCF.
Valuations are all over the map.
And Matt, what's your 12-month view on lithium prices? I mean, the spot you mean goes to 3,000?
We have a restocking cycle in September, October, and my gut feeling is.
Welcome back to Rockstock Channel. It's Thursday, August 13th, and Matt and I are joined for our weekly Rockstock recap again with commodities consultant Chris Robb, who many of you will remember from our Fast Markets Lithium Conference recap in Vegas a few months ago, but also we had a very spirited bull-bear debate in November of 2024. We think that's kind of opportune because he's not always bearish, Chris, but there are some people who are often bearish in lithium. And before we get into the discussion, I want to strongly recommend something that Matt published this week called 5 Things the Market is Getting Wrong About Lithium. And in fact, if you haven't watched Matt's 12-minute Rockstock University video yet, I'd almost suggest you stop watching this recap, watch that video first, and then come back and watch this video. Because Matt takes on 5 of the most common bear arguments we hear about lithium, which includes some great clips from Rick Rule and Robert Friedland, who have argued for well over a decade that because lithium is common geologically and relatively easy to find, there's no scarcity, so why invest? We're going to spend a bit more time refuting the perma-lithium bears, whose followers have unfortunately missed 2 handfuls of companies that have 10 or 20x'd over the course of the last 10 years, like PLS, Liontown, PMET, Q2 Metals, Lithium Argentina, Alevra, Galan, Kidman, Orocobre, and many others. For those willing to do the work, like watching this channel and following our written work on social media, it's been a lot easier in many ways to make money in the extremely volatile lithium market dynamic relative to, say, copper or uranium, for which I'm also quite bullish, but I find the time horizon for price improvement and trying to pick individual stock winners has been quite a bit harder over the past 5 and 10 years and even now. So before we begin, let me turn it over to Matt for some introductory comments.
I'm very honored, Howard. Normally I don't get to speak in the introduction at all. So I'm really excited. And guys, please, mention in the comment section if you think this was good, because then I might get to speak again. So lithium demand compounded at a roughly 27% annually over the past decade, versus roughly 3 to 5% for copper over long periods. And looking at our numbers, we are suggesting that lithium could continue to grow at a rate of about 20% annually over the next decade. And I think that changes pretty much everything that you know or you think you know about supply. I'll get into the arguments I made in a minute, but first of all, I want to strongly recommend our listeners to Howard's recent lithium-ion bull, which followed on from last Friday's mining event with President Trump and the State Department. I think what stood out for me, Howard, was your point that while Washington is still heavily promoting rare earths, copper, seafloor mining, aluminium, we are starting to see a little bit of a movement on the battery value chain as well. The biggest funding went to a nano developer, Silo Nanotechnologies. We've obviously seen Enesis for defense.
Matt, it's worth mentioning the bigness of that was really big. Like it was 3/4 of the funding. Huge.
Yeah,
it was $1.2 billion out of 2.1, I think, in total announced of new money last week.
We've seen Enesis getting defense funding, and we also saw the gas and storage project in Puerto Rico a few weeks ago. So I think that highlights that we are starting to see movement from the administration towards batteries behind the scenes. It would still be a great help, I think, to hear President Trump speak a little bit more about it. But for now, it's nice to see some movement. And I'd also like to see a little bit more movement on the missing middle, particularly in cathode materials, as we move forward.
Yeah, you raise a. It's interesting when we try to dig into what they did. The silo thing is interesting for the following reason: is that anodes right now are made from a mixture of natural and synthetic graphite, and synthetic graphite is a byproduct of petroleum refining. And you have to use specific crude slates to make very specific type called needle coke, and that becomes, then you graphitize it. China is all of the growth there. And so if you look at this, like we have some thinking people in Washington now, which we clearly do, there's a specific reason they went to sila, because what they want to do is they want to move from carbon anodes to a combination of carbon silicon anodes, where they think they can get a competitive advantage and get away from China's essentially dominance of synthetic graphite. Because there's no Western, I used to trade this stuff. There's like 3 or 4 needle coke producers in the West. One's in the UK, there's a couple in the US. That's not a natural growth place. So let's try to move away from that and leap and get ahead on the technology. So it's actually kind of interesting that they did that the way they did it. And there's a reason why. It's not just because we love the battery food chain. We love this specific piece of it for this specific reason.
Yeah, and I think that's a really, really important takeaway. I mean, the silicon carbon,
And if I want to
silicon
continue
anode.
on this, because you've got me here, is that this is actually one of the reasons I actually believe you're not going to see money go into spodumene conversion in America, because that's a solution to a problem that does not exist. And the reason it doesn't exist is because Argentina and Chile produce enormous amounts of lithium carbonate, which can be very easily converted to hydroxide if you need it, which is what Albemarle and previously FMC and Arcadium were doing for decades. And so we don't need that solution because we already have it. We can make battery grade, as much battery grade lithium as the US or North America consumes very easily. And we don't need to go convert spodumene to do that. And so if I'm a betting man, I don't think the government comes in on that. I think they realize it's a problem they don't need to solve. And that probably is not what you think, but that's what I think.
I appreciate that thought, and I will want to get into that in greater detail. I will say that they did provide $25 million to Westwater Resources for the Alabama natural graphite mine. And in the past, they have funded, Vidalia in Louisiana and in Mozambique, the Syra asset. So that was the prior administration. There's a lot of stuff. There's a lot of first of its kind investments that are happening. So venture capital, the government gave a big loan to Lithium Americas to do a first of a kind of integrated. Sila Nano, I think, was incubated during the Biden administration.
The Lithium Americas thing was done by the Biden administration, and anybody who looks themselves in the mirror and says that there's no way that the credit markets would ever have been there for that without the government is a liar, because that is a fact. There's no way that money could ever have been raised without the government on the back of GM. GM freaked out on a previous price cycle. They're unlikely to do that again. So I regard
Okay, fine. But Sila Nano is getting a similar, debt agreement.
A similar deal.
No private market would have given Sila that deal.
Fair enough, but the government, what I'm telling you is that market, anodes, is a different market than lithium, and the government's not going to give money to spodumene conversion because it's a problem that doesn't exist. We can get plenty of lithium carbonate, lithium battery grade hydroxide without converting spodumene in North America.
Okay. In my opinion, Chris, I think there's enough demand for lithium that the government actually doesn't need to write that many more checks for lithium. So I don't know that the government needs to fund downstream lithium hydroxide or any other types of lithium. But I do think that Tesla and others will convert spodumene to either carbonate or hydroxide, hard rock. as a cost-effective solution relative to other sources which will need to be developed, like sediment and DLE brine. So I think the free market will determine what happens in lithium, right? As long as lithium is in a price range, I think that needs to be kind of in 25 to 30,000. But we could discuss that. Let me just finish a little bit because I want to play some further clips of Rick Rule, that even from just kind of last week when he was actually asked about Standard Lithium and the lithium thesis generally. But before we do that, I just want to remind all of our viewers that we will speak about some companies in which RK Equity is an advisor to or holds equity interests in this video, but we are not, of course, financial advisors. This video is for informational purposes only and should not be considered investment advice. Please do your own research and read the disclaimer at the end of this video. I'd also like to thank our sponsor, Clean Elements, an investor group focused on providing growth capital for critical minerals developers focused on the energy transition. Clean Elements has invested over $30 million to date and is currently the largest shareholder of both Galan Lithium and NOAA Lithium Brines, two companies developing high-grade lithium brine projects in Argentina. And now, as I said, I'm going to play just 3 minutes, from Rick last week again when he was asked about Standard Lithium, and we'll hear his arguments, and then we'll use that as a launching point to discuss further whether or not Matt and Chris agree or disagree with some or all of those points, as well as add new points.
Surin wants to know your opinion or outlook on the lithium industry and also on Standard Lithium.
I don't have a ranking on Standard Lithium, and I need to say I'm very cautious on lithium. The alleged shortage that we had 7 years ago was not a shortage of primary lithium. It was the fact that lithium demand grew fast enough that we had a shortage of processing capacity. During this shortage, the second largest lithium producer in the world, SQM, reported that they had 185 years of reserve. That's wrong. 85 years of production at current demand. So we didn't have a shortage of lithium. We had a shortage of lithium processing capacity. The price for processed lithium skyrocketed, and everybody and their brother started looking for lithium. Because we hadn't looked for it before, we hadn't found much. But when we started looking for it, we found a lot. At the same time that we found a lot, the bottleneck in processing capacity went away. So we're oversupplied in lithium now. I would suspect of the 150 uranium juniors that were spawned during the so-called shortage, probably 5 or 6 have developable projects, which means that 140 to 145 don't have developable projects. The second thing that concerns me about the lithium business is that each of Mid-America Power, part of Berkshire Hathaway, Occidental Petroleum, Chevron, and Exxon believe that they can make direct lithium extraction work. Direct lithium extraction is where you take lithium-rich brines, often produced for free as a co-product of oil and gas, and strip the lithium out of it. If your lifting and production costs of lithium begin to approach free from direct lithium extraction, that'll be very hard on the hard rock lithium producers. I'm not an expert in technology. In fact, I'm anything but. So I don't know that direct lithium extraction will work. But I'm interested that people who are a lot smarter than I, say the folks at Exxon, believe it will. I know from my own background in oil and gas, and also from my background in geothermal, that until very recently, 15 years ago, lithium was regarded as waste. It was something that fouled your equipment in geothermal and oil and gas exploration. So for all those reasons, I would be careful about the lithium business.
Just to summarize that, Matt and Chris, Rick basically is making 3 arguments against lithium. Firstly, that lithium is incredibly common, and companies like SQM already have, 85 years of reserves at current demand. And then he said the bottleneck when lithium went to 80,000 was just Chinese processing. And now there's no bottleneck on processing. And because lithium's abundant, he's skeptical that the price and profitability from lithium companies will be worthwhile. And then finally, based on his history in oil and gas, as well as geothermal, in which lithium was considered to be a waste or free byproduct, he now thinks that DLE and the entry of Exxon, Chevron, Occidental and Berkshire Hathaway into the smack over in the Salton Sea could unlock enormous additional supply and kill the economics of hard rock producers. So with that, point by point, Matt, why don't we start with you? Why don't you pick apart those arguments?
Yeah, okay. Well, I'll jump in on the point about resources, which I think is a really interesting one. And I mean, Dale Henderson addressed this in his the CEO of PLS addressed this in his presentation to the Fast Markets conference, and he basically said, look, the challenge is not identifying lithium resources. He said something that I completely agree with. We've identified plenty of lithium, but the challenge is converting those resources into dependable supply. And as I flag in my blog article, that's actually not proven to be that easy. And if you look at the complete defined resources for lithium outside China, estimate it's just shy of 800 million tons as of the end of the second quarter of this year. And that looks like a lot of resource. But then when you correct that for the amount of resource that could actually be developed, we're probably only talking about 30% of that, which is about 280 million tons only, or 30 years of resources at current demand levels or currently forecast demand levels. So, I mean, that's really what we're talking about.
I mean, Rick Rule's argument's a stupid argument, because I can go through 5 or 6 different commodities and the amount of quote reserves, resources that are available. It's irrelevant. What's relevant is, do they get developed? Not if they exist. What's the incentive price to develop them, and who's going to commit that capital? And one of the things I find interesting is, really since 10 years on, there's been four in my name. Tell me if I'm wrong, and you guys are smart guys, so you can tell me. There've been 4 independent lithium projects that got developed on their own. Every single other one had the Chinese or the big boys backing it. And the 4 are Sigma, Finis at Core, which is coming back, but we did go into production, Galan, and Kathleen Valley. Those are the only 4 I've seen on their own, without a big boy coming in and financing them, that actually got developed and got done. And I might add, because I spend a lot of time on copper, if you go look at copper, you're going to find sort of the same thing, which is, it's just fundamentally hard to raise money and for commodity projects when the price looks like this, and it's hard to from an equity basis, it's hard, from a debt basis, it's hard, from a project finance basis, it's hard. It's just hard. And so it's not relevant how much resources and reserves are. What's relevant is, what is a price level that can get people to commit capital to develop things. It's very simple.
And I think that comes back, I think that's a really important argument. It comes back to the fact that lithium is such an immature business, and there really aren't that many producers at the moment in the business that have got lots of cash flow. I mean, there's certainly more than there were in the last cycle, so they're able to finance more projects. But there certainly are not as many, for instance, as there are in the copper business, or other commodities. So it's really, really important that we get more of these independent projects financed, because we need companies to have access to cash flow, so that they can fund new projects, because the access to the equity market is really drying up at the moment. So I mean, I think that would be my first takeaway on the Rick Ruled argument, and how common lithium is. Chris, do you want to take the argument about the bottleneck being Chinese processing?
I mean, why is it a bottleneck? Chinese processing overbuilt. I mean, there's
no, he said that there was a shortage, and then they overbuilt, right? Like the lithium price went to 80, and then they overbuilt.
You can go back to that's just wrong. I mean, he is wrong, because Chinese processing capacity has always been overbuilt. That was never the bottleneck. The bottleneck is that demand from a small number went crazy and supply couldn't keep up. I mean, this is classic tight market. Market went crazy, and then because it's not traded on a futures exchange, physical traders tighten it even more, and it goes even more crazy. I don't know. The guy's just wrong. That's all. I don't know what else you can say.
I appreciate that, By the way, we've invited Rick Rule on our podcast, a couple of times, and would like to do so again here. Would love to have this debate with you, Rick.
I mean,
We've known.
it's funny if you go way back in the day, it was the Ken Brinsden days at Pilbara. They had a presentation, it was like 20 or 21, where they actually went through the amount of the overcapacity of spodumene conversion in China, which when you're a seller is great, more right. I mean, if there's more capacity, then it's good to be a seller. This has always been the case. This is just not correct. And by the way, that's for the mining side. The brine side, that's just a specious argument because you're producing either battery grade or close to battery grade. So it's just wrong. I mean, and by the way, listen, that's a guy, we all cover a lot of stuff. As he said, he's not a lithium expert. Someone told him that. That's fine. It's just not correct.
No, he's not a lithium expert, but since 2015, every time he brings up lithium, he laughs about it and says he's a skeptic and it's not investable, right? So he's
but I mean, but that's great. He's been wrong a bunch of times. So again, like people are wrong.
But at the tops of markets, he reflects his bearishness, and then he gets a lot of airtime. See, I told you so.
I mean, come on, this is, I know, Howard, you don't short stocks. These are cyclical industries. They go up and they go down, and you can make money on both sides. Lithium went down, it overcorrected. You're way below incentive price. What happened? Prices came back, and now we're at a very healthy level. We're past incentive price. Things can get built at this price level. We can debate that, but I think we're at incentive price. Things can get built now, and they are being built.
I agree. Let's dig into his last argument about lithium being waste in geothermal, and oil fields. And now that Exxon, Occidental, and Berkshire Hathaway, even though he's not an expert on DLE, he's skeptical or he believes that Exxon spending, tens of millions of dollars means that, low-cost lithium from these resources is coming, and it's going to be bad for hard rock producers.
And I'll take that one. Matt, jump in. But I spoke to the Exxon guy who this is his baby. He, in the Exxon food chain. I think I saw him at the Fast Markets Giga Conference and talked to him for 10 minutes, and he said, "Listen, we think we can make it work. We're very good at this stuff. We think we can make it work within an acceptable price range as we forecasted. But I have to go, and this is Exxon, compete for capital against projects from all over the world. And I've got to prove that my returns are good enough to justify a capital allocation being given to me." And you know what? That doesn't snap your fingers. I mean, his comment to me is they're going to have no appreciable volumes out of the Smackover till 2030 earliest. Okay, that's 3 years away, and big balance sheets will attack this. And as Matt will happy to talk about, the arithmetic of compounding growth rates is you're probably going to need it then. The number 2 point I'll make about DLE is the jury is still out. Aramed said some pretty bullish things about where they've gotten cost to. They've made their proprietary French technology work. I think they're never going to disclose this to the market. The ultimate IRR on that project is probably single digits. And the next stage will probably be better. They brought in a Chinese partner to help them build it, one of their nickel partners in Indonesia. And
that partner left, though. The partner.
The partner had to put it back because they didn't love the business. But my point is this: is that DLE, the jury's still out, and we'll see. We'll see how financeable it is, how productive it is, how fast it comes into production, et cetera, et cetera. But the jury is still out, and as long as the jury's out, that's a bullish factor for lithium.
Yeah, I mean, I would just add to that I think initially Exxon were targeting 27, 28 for first production, and now they're saying 2030. I mean, production from the Salton-Sea is 5 or 6 years delayed.
So 5 or 6 years delayed for 5 or 6 years. I mean, it's mañana, right?
I was being nice.
Well, don't be nice. But I mean, be honest. I mean, mañana. I mean, what is that thing? What is it? The one, the ion exchange, lilac? I mean, mañana. It just goes on and on and on. Like, when's it going to work? When are we going to get volumes? The other one is what's the one? They got some. I think they just got some money. The guys who have an operation in Texas and in South America. Who are they?
Energy X.
Yeah, Energy X.
Energy X got $225 million for
Yeah, they never
their
released
conventional solar project.
They released an economic study, but they never released like a 300-page 43-101 where you can get into the sustaining capex, where will the royalties be, these things. So it's just.
They're not a fully public company, so I don't know that they need to do that yet, or that they've raised money with retail investors.
You're not gonna have people have conviction on your ability to actually produce economically until you do that.
Well, ENI, an Italian company, I'm sure had access to the information in Chile, from which they are writing the $225 million check. So that's an impressive amount of money from an established oil major, right? But they went into.
But you're forgetting it's an oil major. It's a rounding error. Okay.
I understand, and that's why when Rick Rule says, big oil spending tens of millions, right? When this requires billions, right? It's not credible as an argument. But what's
I just interject there. I think that we'll get more detail when Standard Lithium publish their PEA on their new
Texas
project, and I think that's going to be a very interesting data point for DLE.
I just want to say, and full disclosure, Standard Lithium is a subscriber to RK Equity Services, and we've interviewed them and will interview them again. We are a believer in that project. But what's interesting is that Rick was asked, what do you think about Standard Lithium? And he said, I don't have a rating on Standard Lithium. And then he says how Exxon, Chevron, Occidental, and Berkshire are going to disrupt this, but he doesn't mention Equinor, right, which is Standard Lithium's partner and is big oil and is the most advanced and is really the only public way to play this. So if he's bullish DLE, right, why does he have no opinion on Standard Lithium? So anyhow, bottom line is he has not done the work on lithium for 10 years, but he's casted shade on the market all of this time. And he has a very big voice in gold and silver and uranium. And there's a lot of retail investors who follow him and don't invest in lithium. So a lot of the reason I'm bringing all of this up and the reason why Matt wrote that piece and we've been doing what we're doing for so long is that lithium was this little industry. It's now medium sized. It's grown incredibly rapidly, much more so than we forecasted in each of the last number of years, and has continued to grow at that pace, will continue to grow 3 to 5 times GDP, and here he's just like, no, but I love copper, I love uranium. Like, we have a copper scoreboard, there's like 150 names on that. How do you pick who's going to win?
But Howard, sometimes people just don't want to do the work. So you're not going to do the work, then just that you have less credibility. Like, listen, I don't touch uranium, I don't touch gold. I would never say anything. I can tell you, I know enough to be dangerous, but I'm never going to give anybody, I'm not going to have a conviction view on it because I just don't do that. I haven't done the work. That's it.
Yeah. So just be silent on it, right? You don't need to cast shade on it when you have such a big platform.
Yeah, but when listen, people have egos, people have views. That's fine. You would hope the market's efficient enough. And if it's not, it's not.
Okay. It is efficient. I just think a lot of his retail followers have missed opportunities in lithium. And if they, do their homework, so this is on lithium, Rick Rule's wonderful. He's super articulate. He's a billionaire, unbelievably successful. But if you follow him, just ignore what he says on lithium and listen to us instead. How about that? So with that as a kickoff, and thank you both for spending time to, dig into that. What else, Chris, from, Matt's piece that he wrote this week, what do you like, agree with, disagree with? And where are you also just on lithium? Because you were bullish a year ago and then you sold too early, you told us, in January, February.
100%. Yeah.
Are you now coming back in now that stocks have gone 30-40% down?
No. I think price is in a good place. I'm going to go to Matt. This was not in Matt's blog, but he asked me to talk about valuation. And this is where I think, and maybe I will have a different view than you do. I don't think lithium stocks are undervalued at all. I think that if you let's talk about copper, because there's a lot of single copper name equities, single commodity producers who, and copper is the belle of the ball, like lithium theoretically should be. And those things on a 2-year, 24-month EV to EBITDA basis trade about, like I'm using Freeport, First Quantum, Hud Bay, Sandfire, and Capstone, traded about 6 times. Okay, and historically that is definitely higher than you would be trading something 4.5 times where prices are today. That's not the case because people love copper, love the theme, blah blah blah. I'm going to give you the same analysis, and again, that's consensus numbers, consensus, Wall Street analysts across the thing. Liontown trading 5.5 times, Pilbara trading 9.4 times, Albemarle trading 6.4 times, and Lithium Argentina play trading 8.4 times. In my mind, they're actually slightly expensive. Now, what historically in lithium space has always been is this fight between the chemical guys and the commodity guys. We need a chemical multiple. We're something special. I've never believed that. I don't think that's true. Why is battery grade, not battery? Why is 99.9% copper or nickel any different than 99.9% lithium hydroxide or lithium carbonate? I don't believe that. I think the stocks essentially have derated, and they've derated because you probably have more mining people owning them and saying, we think this is the right price.
Can I ask, Chris?
And the last thing I'll say is, and then people will say, well, wait, lithium's this super special thing because it has this enormous demand growth, blah, blah, blah. And maybe it should get a rare earth multiple. Now, Linus trades 12 times, MP trades 20 times, but Neo Performance, which is funny enough, the real metal magnet metal stock only trades 8.5 times. So yeah, you can believe that lithium should trade at rare earth multiples, fair enough. Now, and I'm talking producers here, we're not talking developers. That is not an argument I find convincing. And therefore, I think they're probably in the right zone where they are. Now, you can have a bullish view on price, that changes everything. If you think price is too low and it's going to double, buy the stocks right now and they're all going to go up. Because if you're right, price,
What about pure organic volume growth, which I would argue is higher for Lithium Argentina?
Come back to that point because you're valuing on EV EBITDA, but a lot of these companies have got major growth projects.
Yeah, but so what? I mean, sort of the copper
want to look on
the
NAV.
volumes go up, EBITDA should go up.
I want to look on NAV so I can do some of the part valuation.
NAV's a bullshit valuation basis because it depends on what copper price you put in. Put in a big copper price, low copper price. Where does NAV come from? Well, what's your NAV? You're really using a DCF for mining stocks? Nobody uses a DCF.
On the contrary, I've always used a DCF.
People don't use DCFs for producers. Go look. Everyone uses EV to EBITDA because they understand DCF based on what commodity price you put in. Put a high commodity price in this. Put currency in this. That the world doesn't work that way.
I disagree. I've always used a DCF when I've been on the buy side. In the up cycle. In the down cycle, I use an earnings-based approach, like you're saying. But in the up cycle, I've always used a DCF because I need to factor in the impact of the growth. The new projects, and I can't pick that up on EV EBITDA because if the projects are 2 to 3 years out, it doesn't show up in my earnings. So I want to be able to have some idea of what the project.
My experience being on the buy side is nobody uses a DCF. We have a different view. You want to use a DCF? That's great. You're making very long-term price assumptions, which are hard. You're making long-term currency assumptions, which are hard. I don't find it to be a reliable valuation basis.
Mm-hmm. And I guess, yeah.
Sorry,
so I mean,
comparing.
Yeah. So I mean, I think the point that I would make is, something like, for instance, Lithium Argentina. You're looking at what, a third of their potential production that you're valuing it at the moment. So you've got massive growth coming through.
But that growth costs capital. What's the return on the capital? That's what really matters. It's easy to grow volumes. Just dump a bunch of capital in there, have no free cash flow, lever up, and you'll grow. But is that a stock you want to own? Maybe not.
At 70% operating margins that Lithium Argentina had last quarter, I would suspect that that's higher than Freeport or First Quantum's margins. And yes, I would want Lithium Argentina's growth to, I don't know what the growth projects are, and it's off a much higher base of Freeport and First Quantum. So I don't think like for like saying Lithium Argentina 6 times EV to EBITDA, that's where it should trade. It's trading at basically replacement value at its market cap, and it has and we do think lithium prices will go up, but even regardless of that, if they stay where they are,
Well,
70% operating margins is
Howard,
very
why is
impressive.
the market giving these stock prices then? Why market's right? Or maybe you want to fight the market. People buyers and sellers who decided this is what we think the valuation range should be.
The markets are voting, weighing machines, at different times, right?
Sure, fair
Okay,
enough.
so
Fair enough.
you're right.
Fair enough.
So why valuations are all over the map? We just had an example today. PLS, is buying the Salinas property from
Yeah.
Lithium Ionic, and they're paying 3 times what Lithium Ionic is trading at because the public markets are inefficient, certainly for single asset companies in commodities, which to my point, right? The Trump administration is favoring rare earths. That's why rare earths have a 12 times multiple. If Trump suddenly started saying, I like lithium, then lithium companies would re-rate, right, to rare earths multiples.
But maybe there's a reason he's not saying I like lithium because he doesn't believe it's a supply problem, which is what I raised earlier. I don't think it's a North American lithium does not have a North American supply problem. Rare earths do.
I think the other thing that the point that I would make is I don't think that lithium consensus, sell side consensus, is very good in terms of price forecasting. You've got a lot of North American brokers in there, global brokers with a big North American business, who are quite down on the lithium price because they don't really know the lithium industry very well. I mean, if you look at, for instance, what the Aussie brokers are forecasting, who are much, much closer to the lithium price and what it's doing, then I think you'd probably find that the consensus valuations were substantially cheaper. If you
I mean, Pilbara is trading 9.4 times. It's the most expensive stock in the lithium space. So it's an Australian listed equity. That would.
It should be the most expensive.
But on
It's the blue
consensus,
chip.
not on
It should be the
Australian.
most expensive, though. It's the biggest. It has high margins. It has a great management, great assets, low cost, and great growth. Right. So it should be.
Howard, we can go. I'm just giving you a basis for why.
But you think it should trade at 6? You think it should trade like Freeport?
Yeah, absolutely.
Okay.
I think they should trade like a single commodity mining stock should trade.
Okay, like Fortescue, right? Or I don't know what
No,
Fortescue
because
trades at.
iron ore is a shittier commodity, but lithium and copper are similar in terms of how people look at them as a story. I understand lithium's demand growth is far higher than copper's, but that's not how the market thinks about it. And my general thing is, what Keynes said once: the market will stay irrational longer than you'll stay liquid. You can try to fight the market in the weighing machine, voting machine stuff, but it may not work. That's all.
Okay, so you're not buying at these levels. Do you think things are overpriced? Would you be shorting?
No, I don't think they're overpriced. And what I do like is, as I said to you, I've said numbers of times, I like Core Lithium. Funded, high, good development projects, which are funded, easy way to make money. They just have to execute, then they get a market multiple, and the stock goes up. That I like. But to buy a producer now, no. That doesn't mean I'm shorting them. I just don't think I think there's other more interesting things that'll go up more.
Okay. It's interesting that you mentioned Core. They are funded with Western capital. I'm just curious what their valuation. They have a $1.1 billion valuation Aussie. So how does that, they're a year or two away from production, right? So they still need to prove themselves.
They actually have a chunk of spodumene from the pit they're going to sell this year. And then they actually go into the underground. So if you look at the numbers, if you want to say 5 times 27 or 28, each stock should be about 52 cents Australian. So I think that's a good.
5 times 27.20. They also have debt on top of that 1.13 Aussie market cap.
Yeah, of course.
There's a fair bit of risk that. So you're saying 5 times 2027, 28.
Let me get my model, Howard. You want to?
Yeah.
Let me just.
Yeah, I'm just
Take a
curious because
minute.
you're saying that PLS is 9.4 times. Is that 27, 28 multiple, or is that the today multiple?
That's 2 years out. So
2 years out.
28.
Okay.
My clients got long in sort of low 20s, then that's been a nice trade.
Okay. Any opinion on Galan lithium?
Haven't done the work. Brian's great. Tends to, they're evaporative. It'll take a while to scale. I just haven't done the work, so I don't want to talk about things I haven't done the work on.
Okay. Besides Core Lithium, and you had mentioned Lithium Africa as an interesting
Yeah, so I'm just
speculation
looking at
in
my
our
model
last
on
video.
Core. Yeah, he's a 2,100, 6% price. 52 cents Australian's about my model of 5.6 times EV to EBITDA on 28, which is about right. So, yeah, it's got upside.
Okay. That's about 50% upside from the current price, in your opinion.
Yeah.
Okay. Nothing against Core. We think Core, I haven't done a relative valuation across all of these companies, but
Because
I
I mean,
have done.
you're brownfield. They've got some revenue between now and when the underground starts. They're funded. It just ticks a lot of boxes. Northern Territory, get a little bit of freight savings. Just ticks a lot of boxes. Very de-risked to me.
Okay. Matt, we have about 10 minutes before we need to go to another call. What else would you like to cover in this spirited conversation, as always, with Chris?
Yeah, so I mean, I think just keep an eye on the Chinese lithium carbonate inventories, down by another 10,000 tons this week, down by
Is this
50,000.
the Guangzhou inventories?
No, these are the SMM lithium carbonate inventories.
Okay. How much credence do you give to SMM? I don't spend a lot of time there. Do you believe them? You think they're lying? You think they're trading their book?
No, I think it's real.
Okay.
I posted on this on social media, and in fact referred to it in my last quarterly. So the restated inventories are close to my calculated inventories that I've used over the last 3 or 4 years.
And Matt,
So
what's your 12-month view on lithium prices? I mean, do you think spodumene goes to 3,000? What's your view?
I think there's I mean, looking at what we're seeing now in the market, I think we have a restocking cycle in September, October. And my gut feeling is yes, prices do go up by 30 to 50% from here.
Wow. Okay.
And that's why I'm so
if
positive
you're
on
right,
yeah.
you should buy every lithium stock there is. Absolutely, 100%.
Yeah.
That's bullish.
So
I must say,
yeah,
I don't want to sound like a complete bear. I do think that Matt, in his blog, said something very powerful of why lithium is different than everything else, which is just the demand growth. I mean, when you're talking, high teens demand growth, it really, from the supply side, it's hard, and you become law of big numbers, and it's tough to keep up. And I don't know, my non-Chinese 27 on 26 is going to be down year on year. I mean, there's going to be less volumes coming non-Chinese in 27 than there are in 26. And if you're really growing it non-Nigeria as well, but if you're really growing it that type of high teens, market should tighten. Full stop. I mean,
yeah.
just should.
I mean, I think it'd be very interesting to see what's coming out of China. I've seen a couple of Chinese commentators who are suggesting there's a fair amount that potentially could come out of China next year. So we'll keep a close eye on that. But I reckon the market remains relatively tight for a number of years. Just looking at some of the news last couple of days, obviously the Lithium Ionic PLS we talked about. Libra Energy Materials, they optioned some interesting ground to the west of Cisco. So hopefully we'll have them on for an update at some point. Howard, you went to the first phosphate uplisting on the NASDAQ today. They rang the bell.
Yeah, they did. That was interesting. And I took some footage there, which we'll put into another video. But so interestingly, they did an ADR. They already had an OTC listing, which is of their common shares. But in the past, I mean, ADRs like Canada and Israel were like the only two countries where you could list without having an ADR if you were a foreign issuer. But they've now made some changes, which I don't fully know, but a lot of U.S. investors won't buy a 5-letter ticker symbol, and they won't go on the OTC, and they won't buy something less than $5. So the ADR enabled them to do a 10 for 1, right? It's not a stock split, but it trades at 10 to 1. So the price is $15, and it's a 4-letter ticker symbol, same as their CSE listing, PHOS. So I think that will attract new universe of investors, in America. What was interesting there is that Gary Stanley, who is a former Department of Commerce person who was on my panel at Fast Markets, where we talked about the midterms, he represents Standard Lithium, but I didn't realize this. He also has represented First Phosphate, for their Washington activity. And Washington, to the conversation we were having earlier with Sila Nano and other things, they've done some stuff in graphite. They are paying attention to phosphate behind the scenes. Also at that event was a guy I was on a panel of mine at 121 who represents KfW, which is a project debt financer from Germany that funded Almonte. They've also funded Arafura. They haven't funded yet First Phosphate, but I found it, pretty impressive that the guy was here at a bell ringing even before they have their DFS. So First Phosphate's done a really good job in Canada getting Canadian money, but they're having access to, U.S., European, eyes, are on the company as well. So anyway, that was this morning before I rushed back home to do this interview.
And just a couple of adverts. We recorded Galan earlier this week. That interview is coming out in the next couple of days. I thought that was a really interesting interview. And also Lithium Africa, again, we had a catch up with them and some really interesting takeaways from that interview. So keep
and
an
Lithium
eye out.
Ionic as well. Like we recorded them.
Well,
too.
Lithium Ionic is out. Yep.
It's out. It was out. Yep. Okay.
Just two things. Just two things to add on Matt's blog, since you wanted to talk about that. I mean, I think Matt makes a really, really, really powerful point on sodium ion about the size you need for the same amount of energy and how that matters. It obviously matters in a car. It matters in storage. It just matters. And it's a very powerful point he makes. And, it certainly will take a bit of lithium demand away, but it will be a bit. It's not going to be material.
I have about 10% in my model for sodium ion and other techs.
And the second thing on storage, which when I first looked at lithium back in 2017, I always thought storage was the killer app, not vehicles. And the reason for that is any manufacturing facility, which is really not where the demand is, but it will slowly come. Any manufacturing facility that has a time-based electricity pricing, such like an aluminum smelter, for instance, ferroalloy smelter, this is a magic solution because it allows you to basically arbitrage what you're paying for electricity. And that is real for many, many manufacturing institutions globally. Fertilizer plants, petroleum refineries, go on and on and on. And most of the storage that gets mentioned is stationary and grid related, but that is a very valid part of the storage thesis, and the storage thesis is very strong.
Okay, thank you for that, Chris, and always appreciate your opinion, short, medium, and long term. So the valuation, I think this was a very good and interesting kind of argument there. Matt, has been relatively cautious on lithium for the past kind of number of months. He's really stepped on the gas in his view on lithium in the past few weeks based on his fundamental analysis. So that's his view. You can agree or disagree, Chris. Markets, we think, are not always efficient and a bit asleep, but they just follow the lithium price. So if GFX price starts going up, Matt will be proved right.
100%, 100%. And that's why, if Matt has a differentiated bullish view on lithium price, you back the truck up and load up on the stocks because the stock's going to go up if the lithium price goes up.
Well, I've been doing so for the past couple of weeks. So with
right.
that, Chris, we've got to go. Thank you very much for joining us once again, and look forward to
Great to
doing
talk
it
to you
again in the
guys.
future.
You have a nice afternoon.
Thanks,
Okay.
Chris.
Thanks,
Keep,
buddy.
keep
Cheers,
it on.
guys.